What is going on with mortgage rates? In today's video, we're going to discuss this topic that's having a significant impact on the housing market right now. If you've been following the real estate market recently, you probably noticed the changes. Whether you're a buyer, a seller, or simply interested in understanding how these shifts are affecting the market, this video will provide some clarity. We'll also briefly explore the history of mortgage rates, how they've evolved, and what we can expect moving forward. Additionally, we'll discuss the specific effects these trends have on the housing market in Temescal Valley and the Inland Empire. So let's get started. To fully understand the current state of mortgage rates, it's important to first look at their historical context. Over the past few decades, mortgage rates have fluctuated considerably, influenced by various factors such as inflation, government policy, and broader economic conditions. In the 1980s, mortgage rates reached astronomical levels, peaking above 18%. And this was a challenging time for homebuyers, as high rates made home ownership unaffordable for many. However, throughout the 1990s and early 2000s, mortgage rates began to trend downward, hovering in the 6 to 8% range. This period provided greater access to home ownership for many individuals and families. Following the 2008 financial crisis, the Federal Reserve responded by lowering interest rates, which resulted in a significant decline in mortgage rates. By 2012, 30-year fixed mortgage rates were consistently below 4%, and they remained at historically low levels for nearly a decade. In the wake of the COVID-19 pandemic, rates fell even further, reaching historic lows around 2.5%. This period marked a unique window of opportunity for homebuyers, with affordability at an all-time high. However, as we now know, those exceptional low rates were not sustainable. Now let's turn to the present. As of 2025, mortgage rates have increased substantially, with the typical 30-year fixed rate loan now hovering between 6 and 7%. And this marks a significant shift from the record low rates we saw in the previous decade. The primary driver of these interest rates is the Federal Reserve's actions to combat inflation. By raising short-term interest rates, the Fed aims to reduce economic overheating and control inflation. Unfortunately, these measures have had the side effect of increasing the cost of borrowing, which directly affects mortgage rates. The higher mortgage rates are impacting both home buyers and sellers in ways that we haven't seen in years. The rise in mortgage rates has had a noticeable effect on the housing market, both nationwide and here in our local area. As mortgage rates climb, the cost of financing a home increases. For example, a $500,000 home purchased with a 3% mortgage rate might result in a monthly payment of around $2,100. However, with a 6.5% mortgage rate, the same house could cost upwards of $3,200 per month. That's an additional $1,100 each month, a substantial difference for many buyers. As a result, we are seeing a decrease in buyer demand. Many prospective home buyers are finding it more difficult to afford the homes that they initially targeted. This shift is particularly evident in the move-up buyer market, where individuals are looking for larger or more expensive homes, but higher rates are limiting their purchasing power. At the same time, sellers are adjusting their expectations. Many homeowners, particularly those who purchased homes when mortgage rates were lower, are hesitant to sell. The prospect of selling their current home and purchasing a new one with a higher mortgage rate increases the financial disincentive. Now let's take a closer look at how these trends are specifically affecting Temescal Valley and the Inland Empire. Historically, these areas have provided more affordable housing options compared to coastal regions like Los Angeles and Orange County, making them attractive to buyers seeking more value for their money. Even so, the higher mortgage rates are beginning to create a shift here as well. The Inland Empire, including Temescal Valley, has traditionally been seen as a more affordable alternative, but buyers are now feeling the impact of higher monthly payments. Despite this, we are still seeing strong activity in the market, particularly as we enter the spring selling season. In fact, many sellers in Temescal Valley are putting their homes on the market during this time. Spring has always been a popular season for real estate transactions, and this year is no different. While some sellers may have been hesitant to list their homes during the higher rates, the spring season is driving an uptick in new listings, and this seasonal surge is giving buyers more options to choose from, despite the current challenges in terms of affordability. What's interesting is that buyers, though facing higher rates, are still finding ways to remain active in the market. Many are opting for smaller homes or are willing to adjust their expectations on location or amenities. Additionally, some buyers are taking advantage of adjustable rate mortgages, or ARMs, which offer a lower initial interest rate in an attempt to manage the impact of the higher rates on their monthly payments. The demand is still present, though more measured, and sellers who are pricing their homes competitively are still seeing interest. Buyers and sellers alike are adjusting to the new market dynamics and finding creative ways to make the transaction work. So what can we expect in the coming months? While no one can predict the future with absolute certainty, there are several key factors to keep an eye on. The Federal Reserve has indicated that it will continue to adjust interest rates based on inflationary trends. If inflation continues to slow, it's possible mortgage rates could stabilize or even decrease slightly in the future. However, it's important to note that we are unlikely to see the ultra-low rates we experienced during the pandemic. For those considering buying or selling in Temescal Valley and in the Inland Empire, it's important to stay informed and be prepared for a market that remains in flux. For buyers, it could be a good time to enter the market, especially if you are prepared for the higher mortgage payments. Sellers may need to adjust their expectations in terms of pricing and be patient as the market adjusts to these new realities. It's clear that rising mortgage rates are reshaping the real estate landscape, both nationally and locally here in Temescal Valley and the Inland Empire. Whether you're looking to buy or sell, it's crucial to stay informed and understand the implications of these changes. If you have any questions or need personalized advice, please don't hesitate to reach out. We would be happy to assist you in navigating this evolving market. Now, thank you for watching today's video, and please be sure to like and subscribe to this channel for more real estate insights, and I look forward to seeing you in the next one.